Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, and we're at the 12th of October, 2022, about 6:20 p.m. Central Time. Well, as we take a look at the markets in the evening, at least, all the metals are a bit higher. Impressive. The dollar closed up 9 points, and we're up a little bit in the foreign currencies against the dollar. The stock market's in the green. Look at how many markets are in the green. You're in the green in the nat gas. You're down in the energies. You're down right now in the bonds and the notes. And what's tomorrow about? CPI numbers. So we saw the PPI. It had literally no impact on the market today at all. I watched it and was scratching my head going, boy, we ran a hot PPI, no impact. Does that mean tomorrow a hot CPI number might do the same? I don't know. What would a cooling down CPI number do? Not exactly sure. What I do think happened is with the PPI number where it's at, you've baked in now the 75 basis point hike for November 2nd at the FOMC meeting. I don't see that coming off. Plus, we read the FOMC notes today. They came out at 1 o'clock. Hawkish. So you put the package together, that's what you have. What can alter it and which way would it alter? I think nothing can change, at least in my opinion, a 75 basis point hike. Lowering. Can it go up? Yes. If the CPI were blowout numbers to the upside, I think that you would get Fed action to make a move to the 100 points rate. Doesn't mean I'm right, but that's my guess going in. And, people should say what they think, and that's what I try to do. All right. As we take a look at gold, you can see the market is still underneath the 18-week moving average of closes. I call that the line in the sand. Get used to that name. By the way, if you like these videos, please give me a thumbs up. I'd appreciate it. It helps with our ratings. Number two, the market has come back down here. Obviously, we've seen the resistance point. I said it yesterday, you could call this so far the makings, not yet, the makings of an inverse head and shoulder formation. A shoulder, right through here and there, and a head. You'd have to break out through these highs to get that going. Barring that, it's just nothing. So that's how I view it. When I look at the gold market in a pattern, you're bearish. You have a pattern of lower highs, lower lows. That's the definition of a downtrend. But to get short down here in the 1680 level requires a stop all the way up here that's going to be in the 1730 zone. No, I don't think I'm interested in that. Where's the battleground? Markets that tend to get over an 18-day average on pullbacks tend to find them as support. I can go over and over on the chart and prove that, but I've done it the past few nights, so I'm not going to do it every night. This is the battleground where you're looking for the next direction of the market. When we take a look at Bollinger Bands, the black dashed lines, keep in the back of your mind, they do not run parallel to the 18-day average. They look at right now. That just happens to be how they're looking. It's not set up parallel. Window envelopes will run parallel, not Bollinger Bands. But the Bollinger Bands give you the resistance on the top, support on the bottom, and you're just drifting in the center, waiting for whatever's going to happen next. And in terms of momentum, pointing down. So you have a downtrend. The market is trading underneath the 18-day average of 1681.50. It's 80.80. The bears have control, but for how long? The CPI is going to determine what this does tomorrow, or at least it's going to react to it, and then maybe later in the day it goes its own way. I'll wait and see what it does. In the gold-silver ratio, as I said, silver started losing the gold back here, and it just sliced right through that 18-day average. So now you've got a market that's coming up into the key resistance it had before, in that 89 level. Let's see what it does up there, but I don't see anything here to do. Silver on its own in a downtrend and more pronounced than the gold. Lower highs, lower lows. Should it decide to break further, then the next target is 1790. If it rallies, the first resistance is going to be, in my opinion, the 18-day average with secondary resistance 2003. The bears have control going home in this market. The copper's sort of stuck, and I expect it to stay that way going into whatever's going to happen at the People's Party Congress in China, which is Saturday. And then we'll start hearing whatever their plans are going to be. The problem for copper, and this is my opinion, I was listening to Gary Schilling today, and he hit it on the head. It's used in everything, and we're getting less of everything. What do I mean by that? The worldwide recession has investors hunkering down. Did you look at the Amazon sales? You're getting household gadgets being bought, but not big ticket items for the home. That is what's going on place after place because people are getting fearful. They're scared of the high interest rate. They're getting maxed out on the credit cards. The big ticket items are a bit scary. You don't know where you're going with this inflation story. The stock market's falling apart on people. So they're looking at all this and they're hunkering down. And that could be a very big negative for the copper market. Now, if we don't get good demand, you get a problem, as Mr. Schilling was pointing out. Chile and other producers of copper, often third world countries as we refer to them in America, they pay their debt, they need U.S. flow, and if they're not getting people buying copper around the world, they got to pay in strong U.S. dollars. It's a whammy for them. What do? And he's right. They'll produce more copper to pay the bills, and it starts flooding the market. Just giving you the thoughts. What he didn't mention, and I'm mentioning it, is China consumes 50% of the world copper. If they decide to turn on the spigot, they offset a lot of what he was just talking about. The question is, are they going to do that? And that's what the Party Congress is in part about. When we look at the October platinum, we have lower highs, lower lows. We are, for the past 3 days, actually 2, not including tonight, past 2 days completed trading. We're fighting between the 18 and the 100-day average. And with tonight, we're starting to roll under those averages, which means the bears are taking control. Again, I need to see the CPI number and the reaction to it. Even if I knew the CPI number right now, folks, if somebody called me and said, here it is, I'd have no idea what the reaction to it's going to be. You hear all the time, every year, oh, it's a leaked report. It somehow got out early. Not just this one, any report. Guess what? It's a big step from seeing the report to knowing how the market's going to react unless it's a wacko report. Wacko reports, you have a pretty good idea. Let's assume inflation. Instead of the headline coming in at 8.1, it came out at 10. Just giving you an example. Well, you know pretty much what the market would do. Got it? But telling me instead of 8.1, it's 8.3? Come on. In the palladium, lower highs, lower lows. If it wants to break down, these lower numbers. So there's a lot of what ifs, and I'm not going to be willing to commit myself very much until I see the CPI. But here's the great news. Once the CPI is out of the way, I'm right back into the charts all the way because there's no other major reports to worry about. Yeah, we'll see employment and all that, claims again. Who cares? It's not a CPI number. It's not a PPI number. It doesn't carry the weight of that. And that tells me the Feds will have made up their mind with these two numbers, the PPI today and tomorrow's CPI by tomorrow. I'd be shocked that anything changes it with an exception. What if Russia got crazy with the nuclear device? That changes everything on the table. That's about all that I could see that could change it. When I come to the dollar index, I see higher lows, higher highs, back in an uptrend, not overbought. I think it's just waiting for a reason to pop, and the CPI could be it. If it does pop, it gets to the upper band. What else? Because of today's action, if you take out 112.29.5, that would be a failure number, and you can forget going to that Bollinger Band then. You're just going to play around here and not trend for a little bit. That's how I'd be reading that chart. So there's a lot to be looked at, and that's where we come in and try to help you with it, because tomorrow, as these reports come out, we're going to be all over with emails in our charting services. I don't know if you're aware of it, on our QT. You can listen not to me, but to my cohorts at Linn, that's the firm I'm with, as they're talking the market, the reactions to it, what they think is going to happen. David Hightower, the Hightower report will be on there. We have a lot of people with very well known talking about how they're going to view these markets and what to do. I, of course, will be writing my reviews for my full subscription people, giving them an idea and probably doing some special reports on different markets after I see this. I wanted to put them out in grains and other markets, but I really want to see this report. It impacts the dollar so much that impacts everything else. Why not get it out of the way? And then I'm trading a chart that doesn't have shock treatment about to hit it. That's at least my thought. So if you'd like to get this information, go to our website under free offers. You can just follow my finger up here. Go to the top up here. You'll see an icon appear. Sign up for the free offer, and away you go. I can't wait for tomorrow. I'm excited about putting on a lot more trades. You have a good day.